I've learned that the most profitable sound in markets isn't the click of a mouse, it's the silence. I'm strong enough to hold. I want you to sit with me in that silence, the honest kind that arrives when the open has passed. The adrenaline has drained, and the tape just breathes. The charts are alive but not persuasive. Headlines chirp, but nothing in the depth of book sounds like sponsorship. My cursor floats over a clean buy button and refuses to land. And in that suspended moment, an old ghost pulls up a chair. Jesse Livermore. He doesn't say much, he never needed to, but I can feel his verdict through the years. Like a tide against the hull. It never was my thinking that made the big money. It was my sitting. The world tells me to do more. The market pays me when I can do less until the moment to do more is undeniable. The patience paradox is the weirdest truth I've had to swallow as a trader. The less I trade, the more I make. The longer I wait, the cleaner my wins. The fewer decisions I force, the more power each decision carries. Patience isn't what I was born with. Patience is what I built out of losses, humiliation, and a journal full of almost setups that looked like opportunity and turned out to be tuition. I used to believe participation was progress. I learned the expensive way that presence isn't participation. Presence is preparation. Day after day, I paid for action that relieved anxiety instead of action that harvested asymmetry. Livermore would have recognized the disease instantly. He watched 1,000 younger versions of me rush to prove they were traders by trading. He called it paying the market to teach you what you refuse to learn for free. Time is not the enemy. Time is the partner. He worked with a simple triad: trend, position, risk, and he let time magnify advantage and expose fraud. When trend aligned and a stock proved its line of least resistance, he committed. When the tape was muddy, he went fishing. The genius wasn't in prediction. It was in restraint. He sat tight when he was right, and he quit fast when he was wrong. So he could afford to sit tight again. That's the structure I've had to adopt, not as a slogan, but as a survival mechanism. Let me confess what the silence feels like from the inside. It feels like standing in an empty station after the last train's lights have faded. Every fiber of me insists that another train must be coming. And if I just step closer to the edge, enter now, light and later I'll feel better. That craving has a sound, FOMO trying on the costume of diligence. But markets don't pay me for feeling better. They pay me for being aligned. And alignment requires proof, the kind of proof that survives the first pullback and laughs at the second. The paradox is that I have to wait long enough to see proof, and then wait even longer after I'm in to let time compound it. Sitting is not a pause between real moments. Sitting is the real moment. The money shows up later as a receipt. So here's the contract I sign with myself each morning. I will not trade to escape boredom. I will not book profits to escape fear. I will trade to obey evidence. I will define where I am wrong before I am in. I will size so that discomfort does not become an emergency. I will let the market do the heavy lifting. And when the lift is real, I will do the hardest, richest work a trader can do. Nothing. Common hook. Be honest when the tape goes quiet. Do you feel relief or pressure to find something? Drop one word: relief or pressure, and tell me why. Your answer is your edge map. Tonight, I'll take you into the architecture of this paradox, how urgency and edge wrestle for the wheel. Why the impulse to do something is the costliest signal on your screen. And how Livermore turned waiting into a method instead of a mood. We'll walk from philosophy to fingerprints, a real story where 5 hours of discipline, nothing. Purchased 5 minutes of obviousness. The low point where patience looked like cowardice, and I almost paid for relief. The rule that converts waiting into compounding. And a modern checklist that makes patience operable even when news hits at machine speed. But first we have to open the door to the enemy. Inside the performer in us that equates clicks with competence, and silence with failure. That inner conflict is where most equity dies, not out there on the chart. Step with me into that duel. Asterisk, I've come to recognize the distinct voices at my desk. One is the operator, measured, almost boring, fluent in probability, respectful of evidence. The other is the performer, needy, persuasive, addicted to the theater of participation. The operator waits for confirmation because he trusts that price is the only witness that matters. The performer demands a role in every scene because silence feels like an accusation. When pre-market is gray and structure is vague, the performer leans over my shoulder and whispers, "You're falling behind, put something on." When I'm finally in alignment and a position breathes in my favor, he shows up in a different costume. Book it. Make it real. Feel safe. That's the paradox I wake up to every session. The choice that grows my account tends to feel worse right now, while the choice that makes me feel better right now taxes my account over time. Action is a painkiller. Patience is a prescription. One masks symptoms, the other treats the disease. The market knows this and sells me urgency at premium prices. It's why a do-nothing morning can feel like failure even when do-nothing is the correct trade. I used to believe that excellence in trading meant being early to spot rotation, early to sniff a breakout, early to fade exhaustion. Early did more damage to my equity than any bad thesis. The word itself carried a hidden promise, that being first guaranteed being right. Jesse Livermore dissolved that myth for me. He didn't collect bottoms or tops like trophies. He harvested the middle mile of real trends. He accepted that confirmation might make him late in ego time, but perfectly on time in trend time. In his terms, he waited for the line of least resistance to reveal itself, not to be imagined. Here's what that looks like on a modern screen. I'm flat. A name on my watch list jerks higher. Volume is timid. Breadth doesn't agree. The performer says, take a starter and adjust if it proves itself. The operator replies, if it proves itself, I will choose to be late. Late with proof beats early with hope. The distinction is everything. Proof is not a feeling. It's behavior that survives pullbacks and returns with sponsorship. When I act without proof, I'm not trading my plan, I'm trading my impatience. There's a mirror image on the right side of the P and L. I'm finally in a campaign that works. My unrealized profit grows, and with it, exposure. The performer hates exposure. He says, make it real. Cut half. The operator asks a different question. Has price withdrawn the invitation? If the structure holds, the answer is no. Livermore called this the real work, sitting while right, allowing time to serve the trade. He didn't sit because he was lazy. He sat because trend math pays in proportion to time, not cleverness. I keep a small equation taped under my monitor. Outcome equals edge times time, emotion times frequency. I can't control the market's generosity, but I can fully control frequency. Less, filtered by proof, lets time multiply edge. More, driven by relief, lets emotion divide returns. When I feel the pressure to do something, I run a quick diagnostic. Are my questions expectancy-based or relief-based? Expectancy asks, what would confirm the thesis? Where is the invalidation? What size keeps me honest? Relief asks, how do I avoid missing out? How do I lock something in so I stop feeling exposed? If relief is speaking, I push the chair back. I am not in a trade. I am in a feeling. Livermore's perspective gives me a compass inside this storm. He designed his life to favor the operator and starve the performer. He removed the need to be first. He prized proof over prediction, pyramiding into strength and refusing to spend emotional capital on the need to be right now. Translated to my desk, server-side stop set before entry. Alerts that page me when confirmation arrives, and a hard rule that flat is a position one that protects oxygen. Clarity and courage. Comment hook when a setup looks almost right. Which voice wins at your desk, operator or performer? Type the word in one sentence on what tips the scale for you. We've named the paradox and felt its pull. Now I want to expose the machinery beneath it, the subtle sequence by which a single harmless click becomes a policy of over-trading, and how comfort quietly replaces expectancy as your true objective. In the next section, I'll slow the tape, moment by moment, and show how the psychological trap springs and how to disarm it before it rewires who you are at the screen. I'll take you into the day that rewired my definition of doing nothing. It was a Tuesday that looked like oatmeal, lukewarm pre-market, headlines about cautious optimism, futures drifting inside yesterday's range. My plan the night before had flagged a semiconductor name, I'll call it Atlas Semi. That was coiling beneath a weekly breakout level, with sector breadth improving and a clean higher low staircase on the daily. The edge wasn't in guessing the breakout. It was in letting the tape prove sponsorship, and then letting time do the lifting. At the open, Atlas popped 1% and immediately gave it back. In the past, I would have grabbed that first thrust, called it proactive, and worn the whipsaw like a hair shirt. Instead, I did the most disciplined thing I could. I marked the key levels, so alerts, and pushed the chair back. For the next 90 minutes, I watched price print what Livermore would have called arguments, buyers pressing, sellers answering, neither side winning the courtroom. Volume was mediocre, the sector index was flat, and my edge, such as it was, lived entirely in waiting. My hands itched. I drank water and wrote one sentence in my journal. Presence is preparation, not participation. Right before lunch, something changed. The sector lit up as money rotated out of defensives, breath flipped. The tape on Atlas showed a fast rejection of a dip into VWAP with a surge that dwarfed the morning's volume. That was proof, not vibes. My alert fired. I entered at half size, with the invalidation tucked beneath the morning swing low. This wasn't bravery. It was a pre-committed response to behavior I had asked the market to show me. The first pullback came within minutes. Old me would have tightened the stop out of nerves. Operator me measured the retrace shallow, on lighter. Volume man left the stop where the story would break, not where my comfort would begin. When Atlas reclaimed the intraday high, and the sector confirmed with synchronized pushes across 3 piers, I pyramided another third, pulling my protective stop up beneath the higher low that had just printed. Now I had structure pain. For structure, exactly the way Livermore taught, had to progress, never to protest. And then the real work began. I did nothing. For 2 hours, Atlas moved up, rested, moved up, rested, textbook stairstep, twice, news squalls rattled the broader market, twice. Atlas dipped to the top of the prior base and held. My job was to sit there and not convert a campaign into a scalp. I trailed behind structure, not behind fear. I let the stock talk me out when it was ready, not when my pulse got loud. Late afternoon, we finally got the decision. Atlas accelerated through the weekly level I'd drawn the night before, volume blooming like a flare. I added the last third into that strength, not because I craved size, but because the market had earned more of my capital into the close. I trimmed a portion to pay myself for obeying the plan, and left a runner with the stop under the breakout pivot. The next morning gapped, tagged my trailing stop on the remainder, and closed the campaign with the kind of calm I used to think was impossible. The edge wasn't in the breakout candle. It was in the 5 hours I refused to manufacture action. Here's why this story matters. The P and L came from time, not cleverness, from a morning of disciplined non-participation that preserved capital, and attention for the only moment that deserved either. The patience paradox went to work the instant I stopped paying for relief and started charging the market rent in the currency of proof. Common hook. In that midday quiet after the first fake thrust faded and before proof arrived. Would you have taken a starter to feel involved, or would you have waited for confirmation? Tell me which way you lean and why. What looks clean on replay was messy in my chest. There was a minute in that campaign when doubt ballooned, when a sector wobble and a rumor almost sold me on an exit that had nothing to do with invalidation and everything to do with comfort. That's where we go next, the low heartbeat of the trade. When patience felt like cowardice, and I had to decide whether to protect my ego or my process. Asterisk, the wobble arrived the way doubt always does, quiet first, then theatrical. Atlas had cleared the intraday high, the sector was supportive, and my plan said to sit. Then a headline hit the wire, supply chain chatter, vague but spicy enough for algos to chew. The broader tape hiccuped. Atlas backed off the new high and slid straight to the top of the prior base. That level was supposed to be routine support. But routine feels unfamiliar when the numbers on your screen are yours. I felt my chest tighten. In that precise, traitorous way, not a thesis breaking, just composure bending. This is the minute I used to sell for comfort. My mind began drafting reasonable sounding arguments. Lock the gain, re-enter lower. Don't let green turn red. You can always get back in. None of those lines mentioned proof. All of them mentioned relief. I could hear the performer in me jingling the keys to the exit. The operator in me posed 3 questions I've written on a card taped under my monitor. 1, has price withdrawn the invitation? 2, has my invalidating level been violated on decisive volume? 3, if I exit now, am I paying for safety or buying clarity? 1 by 1. The answers came back inconvenient. Price had pulled back into structure, not through it. My invalidation beneath the morning swing remained intact. Volume on the drop was lighter than on the prior push. Exiting would buy quiet, not clarity. The data said sit. My nerves said run. This is where Livermore walked in. Not the legend with perfect timing, the human who got hurt, learned, codified the hurt, and enforced those codes when hurt tried to renegotiate. He had a rule for this exact feeling. It is not good to be too curious about all the reasons behind price movements. In my translation, let the tape be the judge, not the rumor mill inside your skull. He paired that with a second ethic. Sit tight when right. Sitting tight is not sedative. It's steel. It requires that exits be earned by truth, not tension. So I did what felt like nothing and was actually everything. I pushed the chair back to inches so impulse couldn't reach the mouse by reflex. I expanded the chart to widen context. I watched 1 more minute bar complete. Atlas printed a higher, low right on the pivot I'd marked. The candle tail kissing that shelf and snapping back with a telltale surge through VWAP. The sector's leaders twitched in unison, strength, not panic. That tiny synchrony, the kind you only see when you aren't negotiating with fear, became the fulcrum. My urge to exit wasn't wrong because it felt bad. It was wrong because it lacked evidence. Still, there's a different danger in that minute, stubbornness masquerading as patience. Patience holds structure. Stubbornness defends ego. The difference is whether I can describe, in 1 sentence, the level that must remain true. If I can't, I'm not patient, I'm attached. I restated the thesis out loud. As long as Atlas holds above the morning swing low, and the sector breadth stays green on this pullback, the campaign remains valid. If either condition failed, I would sell without ceremony. That gave my nervous system a job monitor so it stopped auditioning for director. 2 bars later, the decision made itself. Volume bloomed. Atlas reclaimed the pullback's origin with speed that felt like an apology. The very exit I almost took would have been perfectly wrong. I would have paid for quiet and then watched the market do what it hadn't stopped doing, reward behavior, not feeling. Instead, I sat in that chaired silence until the chart offered truth I could spend. I didn't add. I didn't fidget. I just honored the placement of my stop and the reason it lived where it lived. Below the spot, where the story would break, not where my comfort would begin. What changed in that moment wasn't price, it was identity. I felt the hinge swing from someone who trades to feel safe to someone who feels safe. Because he trades his plan. That's not bravado. It's plumbing. Decisions start to flow through the right pipes. The performer can still monologue, but he no longer controls the lighting. End of day validated the choice. Atlas stair-stepped to the weekly level and finally burst through on volume. I trimmed into the strength as planned, protected the remainder under the new base, and closed the platform with oxygen to spare. But the payoff of that midpoint was not P and L. It was proof that patience withstands discomfort better than comfort withstands truth. Common hook. In the last trade where you felt that exit for quiet urge, what single objective condition could have justified your exit but didn't? Share the level or signal you now require before you touch the button. From this valley, the next step is to carve a sentence you can tape above your monitor, rule that turns this turning point into a repeatable edge. Livermore had one, and it carries the paradox inside it, a way to make sitting operable, not optional. In the next section, I'll define the breakthrough rule in plain language, show why it works mathematically and psychologically, and anchor it to actions modern traders can automate. I keep one sentence on a worn card beside my keyboard, because it translates patience from virtue into operating system. Wait for proof, then sit for pay. That's the whole rule in working close. Proof authorizes action. Sitting monetizes correctness. Jesse Livermore said it differently in different places. Line of least resistance. It was my sitting. Let the market show its hand. But the core was consistent. Don't predict the story. Require the story to behave like itself. And then let time compound what behavior confirmed. Here's how I make the rule painfully literal. Before any entry, I demand 2 proofs and 1 plan. Proof 1 is structural. Trend and context agree, higher highs and higher lows or lower for shorts. Sector breadth on my side, and a base that's had time to build cause. Proof 2 is sponsorship. Behavior on the tape that says real money is present, volume on pushes. Quick rejection of weakness, failed breaks that get reclaimed. Then comes the plan, the invalidation that kills the story if touched on decisive action. And the sequence for pyramiding only if price continues to prove me right. The rule then flips from proof to pay. Sit for pay doesn't mean stubbornness. It means my exit must be earned by truth, not tension. Truth shows up as one of 3 things. 1. The invalidation is breached. 2. The character of the move changes, momentum dies and can't resurrect on a retest. Or 3. The time condition expires if I'm using options or a catalyst window, and the move hasn't materialized by my deadline. I'm out because theta and opportunity cost are real. Anything else random headline jitters to red bars into support. The feeling of exposure is not truth. It's noise auditioning for authority. Why this rule works is a mix of arithmetic and anthropology. On the arithmetic side, edge times time is where compounding lives. Getting in with proof increases the probability that my trade belongs to a living trend, rather than a dying tremor. Sitting with rules lets time do the heavy lifting that my ego can't. Trends pay in proportion to how long I can let them work. On the anthropology side, the human animal hates exposure and boredom. We're wired to relieve those feelings. Livermore's rule pre-commits me to a behavior set that overrides relief-seeking with evidence-seeking. It saves me from the 2 symmetrical errors, cutting a winner that still has a pulse and nursing a loser that already has my lunch money. There's a nuance Livermore lived and many traders miss. The rule is bidirectional across the P and L. Wait for proof prevents premature entry. Sit for pay prevents premature exit. But there's a 3rd clause, implied but essential. Quit when disproved. Without the quitting clause, patience downgrades into stubbornness. So the real card on my desk reads, wait for proof. Quit on disproof. Sit for pay. Simple enough to write with a marker, specific enough to automate, hard enough to feel like work. Let me pin it to actions you can sense. Waiting for proof means I will choose to be late in ego time to be perfectly on time in trend time. I'll accept missing the 1st inch to own the middle mile. Quitting on disproof means my stop goes on the server before I enter and moves only toward risk, never away. No debate, Sit for pay means I will not sell a working position to buy quiet. I will only scale out where the story logically could pause prior measured move targets. Higher time frame levels or when momentum's character breaks and fails to recover. Between those milestones, my job is not to be clever. It's to be available to the boredom of a healthy consolidation and the discomfort of open profit. There's also a language component. The rule polices my self-talk. If I hear, lock it so you feel safe, I know I'm violating sit for pay. If I hear, sneak in small so you're involved, I know I'm violating wait for proof. If I hear, give it air because you believed in it, I know I'm violating quit on disproof. The sentence on the card becomes a filter for words as much as for trades. Common hook. If you had to adopt one line on your own desk card, which clause would change you most this week? Wait for proof, quit on disproof, or sit for pay? Write the clause and one concrete behavior you'll enforce around it. This rule only becomes valuable when it's translated into the reality of modern platforms news that detonates mid-candle, options decay that taxes patience, and algorithms that move faster than nerves can settle. In the next section, I'll map Livermore's ethic to today's tools, alerts that let you wait without watching, volatility-based sizing that makes sitting emotionally affordable, and time-based exits that protect options traders from patient decay. We'll turn the sentence into switches you can flip before the bell. I translate Livermore's patience into a set of systems that let me wait without wearing myself out, and sit without selling to buy quiet. The first lever is classification. Before the bell, I classify the session like a pilot classifies weather, trend go, two-sided caution, or chop no-go. I use breadth, volatility regime, and leader behavior to make that call. If the day opens in chop, my best trade is flat. I pre-commit to no initial entries for the first 45 to 60 minutes and let the market earn an upgrade. This alone prevents most boredom clicks. Livermore's time to go fishing becomes a modern status light on my desk. Waiting is easier when I don't have to stare. So I build asynchronous patience with alerts. I mark the 2 or 3 behavior proofs. That would invite my risk reclaiming a broken level on strong volume. A base resolving with sponsorship, sector confirmation, and set price, volume alerts that ping my wrist. While I wait, I do not watch. I prepare. Watching exhausts patience. Preparation funds it. When the alert fires, I'm stepping into a scene that already meets my standard, not trying to invent one out of screensaver noise. I also make sitting emotionally affordable through volatility-adjusted sizing. Distance to invalidation divided into my fixed risk per trade are sets position size. If the storm requires a wider stop, I shrink size so that my stomach doesn't become my stop. The nervous system respects physics. When the loss you've budgeted is small enough to breathe through, you don't sell a winner because fear gets loud. Livermore sat tight because his campaigns were built to withstand counter-punches. I emulate that by ensuring each unit's pain is pre-approved. My stops live on the server before I enter. They move only toward reduced risk as structure forms. They never move away to purchase relief. The act of placing the stop is not just protective, it's identity work. It converts I hope into I accept the terms. And because I accept slippage as tuition, I don't freeze when it happens. I reload clarity instead of reloading ego. For options, patience requires time stops as well as price stops. If I've bought premium into a thesis, and the underlying hasn't done X by time Y, I'm out even if price is flat because theta, and for me in waiting, can quietly become leaking. Livermore didn't have options Greeks, but he had the same ethic. If the market hasn't proved your idea in a reasonable time, you're not patient, you're stuck. I also cap premium exposure per name and use spreads when 4 is elevated. So I'm not betting on both direction and volatility behaving. I wire and kill switches. A daily max drawdown 3R or 4R stops me for the session. A consecutive loss circuit breaker 3 stop outs in a row triggers 1R flat. And a decision cap e.g. 10 total decisions per day, including adds and trims. Decision fatigue is the enemy of patience. Fewer, better decisions keep the operator at the wheel when the performer gets restless. Environment matters. I enforce no social feeds for the first 90 minutes. I do not import other people's urgency before I've read my own tape. I keep one no-trade day metric in my review. Days with 0 trades that honor the plan earn an A. Praising correct inactivity is how patience becomes self-reinforcing, not self-denying. My review ritual praises behavior over P and L. Each campaign gets 3 grades. Waited for proof, quit on disproof, sat for pay. A green trade that violated wait or sit gets a D. A red trade that followed all 3 gets an A. The journal includes screenshots of the moment of maximum temptation and a 1-sentence rewrite. I can reuse. Price pulled back into structure. Not through it hold, or invitation withdrawn exit now. Over time. Those sentences become the internal dialogue that replaces noise. Finally, I build playbooks so patience has a job description. For trend days, by pullbacks to last structure that held, pyramid when sponsorship returns, trail beneath higher lows. For two-sided days, smaller size, take partials at edges, avoid breakouts. For chop, scan, alert, prepare no entries. The market shouldn't meet me. I should meet the market with the right playbook in hand. Livermore's ethic isn't it nostalgia? It's a driver you can install. Wait for proof with alerts and classification. Quit on disproof with server stops and time stops. Sit for pay with volatility sizing and decision caps. Then praise yourself for the days when your most profitable act was refusing to audition for a role. The tape never cast you in. Common hook. Which single switch would increase your patience tomorrow session classification? Alerts for proof, volatility-based sizing, server stops, or a time stop for options. Pick one and write exactly how you'll implement it. We've translated principle into posture. Next, I'll turn posture into procedure, a step-by-step checklist that runs from pre-market to post-close. So the patience paradox becomes muscle memory instead of a motivational poster. Patience isn't a mood I wait to feel. It's a checklist I execute until my nerves catch up with my rules. Here's the exact procedure I run from pre-market to post-close so the patience paradox stops being philosophy and starts being muscle memory. I'm writing it in my own voice because that's how I hear it when the lights come on. 1. Pre-market. Classify the day 5 minutes. I mark the board trend, two-sided, chop, inputs, index breadth advancers, decliners, sector rotation leaders leading or laggards auditioning, overnight range versus 10-day ATR, and VIX trend. Livermore's time to go fishing lives here. If it's chop, I pre-commit to no trades first 45 to 60 minutes. That promise saves me from paying tuition to boredom. 2. Build the invite list 10 minutes. I choose 3 to 6 tickers, only names already coiled near inflection with weekly context behind them. For each, I write a one-line thesis plus 2 proofs and 1 disproof. Proof A structure, e.g. reclaim and hold yesterday's high on volume. Proof B sponsorship, e.g. push plus 20% above 20-day median volume on the break. Or failed breakdown reclaimed within 10 minutes. Disproof, the level that kills the story, not my comfort, e.g. under last higher low with decisive volume. This is Livermore's confirmation doctrine in ink. 3. Set asynchronous patience to minutes. I place price, volume alerts for those proofs. While I wait, I don't watch. I prepare. Watching drains patience. Preparing funds it. For risk budget and position unit 3 minutes. I fix our risk per trade at 0.5% to 1.0% of equity and compute size buyer divided by distance to disproof. With a volatility adjustment ATR. If distance is wide, size is smaller so my stomach doesn't become my stop. This is how I make sitting emotionally affordable. 5. Entry rule. Choose to be late. When an alert fires, I ask, did the 2 proofs print? If yes, I start at 1/2 1/3 size, stop on the server at disproof, and put the ad triggers in writing, add only after a higher low forms, and reclaims the level with sponsorship. Being late in ego time keeps me on time and trend time. 6. Add only to progress protocol. Ads occur only on fresh proof, no averaging into protest. Each ad inherits its own protective stop beneath the new structure. If proof fades, the ad exits first. That's Livermore's pyramiding without bravado. 7. The sit engine while in the trade. I trail beneath structure, not beneath fear. Under last higher low for longs, last lower high for shorts. I use a character check every 15 to 30 minutes, or pull back shallow and bought. Does sponsorship persist? If yes, I do nothing. If character changes and fails to recover on a retest, I scale out on purpose, not for quiet, but for truth. 8. Time stops, especially for options. If by time Y the underlying hasn't reached level X, I'm out even if price is flat, because theta for tax-patient traders who are actually stuck. Patience ends where decay begins. 9. Kill switches save the operator from the performer. Daily max drawdown, 3R for our equals platform closed. 3 strikes, 3 consecutive stop-outs equals 1R flat. Decision cap, 10 decisions entries, ads, trims, exits per day. Decision fatigue starves patience. 10 no-noise windows. First 90 minutes, no social feeds. My read before their urgency. If I need context, I read the tape, not the timeline. 11 endgame, paying myself without killing the trend. At measured move targets or higher time frame levels, I scale partials. I leave a runner with a structured trail. I never sell a working campaign just to feel safe. Sit for pay means exits are earned by truth and validation, character break, or time, never by tension. 12 post close, behavior gradebook 8 minutes. Each campaign gets 3 grades. Waited for proof. Quit on disproof. Sat for pay. A green trade that violated any clause scores poorly. A red trade that honored all 3 scores high. I screenshot the moment of maximum temptation and write a 1-sentence rule I can reuse tomorrow. Pulled back into structure, not through it hold. This is how patience becomes self-reinforcing. 13 weekly reset. Raise the floor, not the ceiling. I audit drawdowns. If red came from valid risk, I stay the course. If red came from relief clicks, I lower frequency, fewer tickers, wider proof. Livermore's ethos: protect oxygen first. Expansion is a byproduct. Run this list and the paradox starts compounding in your favor. You will trade less, and your trades will pay more. You will wait longer, and your waiting will feel like work because it is. You will sit while right, quit while wrong, and watch time the co-investor. Most traders disrespect deposit returns. You didn't have to outsmart anyone. Turn. Common hook, which single step alerts for proof, volatility-based sizing, server-side stops, time stops, or the decision cap would most increase your patience tomorrow morning. Name it and write the exact change you'll make. We've turned patience into procedure. Now we close the film where it began, in the quiet room, the hum of fans, the rule card on the desk, and the resolve to do less until the market earns more. The conclusion isn't fireworks. It's a vow you can keep when the tape goes loud. Would you like me to continue with section 10? When the room finally goes quiet and the fans turn into ocean, I measure the day by one question. Did I wait for proof, quit on disproof, and sit for pay? I turn off the news. The tickers freeze mid-breath. The taskbar glow becomes a small horizon on a dark sea. This is where the story really ends each day, not on the chart, but in the posture I'll carry into tomorrow. I look at the rule card with its 3 blunt lines. Edges worn by the kind of repetition that changes people more than anyone ever will. Wait for proof. Quit on disproof. Sit for pay. If the patience paradox had a spine, those are the vertebrae. And behind them, like a tie that erases footprints, is Livermore's old sentence echoing through a century of noise. The big money is made by sitting right. Sitting right is not the absence of action. It's the presence of alignment. It means I'm willing to appear lazy while the market decides, and then appear stubborn while the market rewards the decision I didn't rush. It means I've accepted a deeper arithmetic than the one that flashes on the P and L. That edge times time is a quiet multiplier, and emotion times frequency is a loud divider. Most traders feed the divider. Today, you and I rewired the menu. We chose fewer decisions, cleaner conditions, tighter language, and exits that must be earned by truth rather than purchased by tension. That doesn't make us immune. It makes us prepared. I want you to feel the weight of that preparation in your own room. Picture tomorrow's open before it arrives. Your session classification sits on the desk like weather, trend, two-sided, or chop. Your invite list is short on purpose: 3 to 6 names that deserve you, 2 proofs, and 1 disproof written in a line a child could read. Alert set so your patience doesn't have to stare. Position size calculated so your stomach doesn't editorialize. Stop on the server so your future self can't renegotiate the constitution you wrote sober. A decision cap that protects your mind from turning fatigue into policy. You haven't earned a trade yet, and that is the point. You've earned clarity. And when the moment comes, because it always does, eventually it will not look like a cinematic miracle. It will look obvious to the prepared and invisible to the restless. A reclaim that sticks, a pullback that respects structure. Sponsorship that arrives when it's supposed to. You'll take the half size that feels late to your ego, but right on time to the trend. You'll add only if the market keeps its promise. And then you'll do the job most traders never train for. You'll do nothing while right. You'll let pullbacks be scenery, not verdicts. You'll trail behind truth, not behind fear. You'll sell where logic lives at levels or on character breaks, not where the pulse wants quiet. This is what old Wall Street meant by tape reading. Long before heat maps and headlines became entertainment, it meant respecting the behavior that repeats and letting time write the P and L in ink. Livermore didn't mythologize himself. He systematized his scars. He knew the cost of being early to noise and late to truth. He wrote rules not to win arguments with the market, but to end arguments inside himself. We've borrowed those rules because humans haven't changed. Even if the screens have learned to glow prettier while they lie. If you take only one thing from this film, take the courage to equate patience with work. Praise the day you did nothing because nothing was deserved. Celebrate the trade you held because everything that mattered still held. Applaud the cut that stung because the invitation was withdrawn, and you refused to buy it back with hope. This is how accounts survive long enough to compound. This is how identities become steady enough to see clearly. This is how a craft becomes a career. Before I shut down, I read the card once more. I place it where morning light will hit it first. I don't ask the market for mercy. I ask myself for memory, the memory to run the checklist before the chemicals, to trust proof over prediction, to give time the task my ego keeps trying to steal. Then I kill the screens, and in the afterglow I hear the cleanest sound I know, the quiet confidence of having done less. Until the market earn more. Comment, write one promise you'll keep tomorrow. No poetry, just a rule in plain words. Example, no trades first hour unless breadth and volume confirm. Drop yours below and pin it where you'll see it before the bell.